Yeah, people have really short attention spans, don't they?
What were you saying?
What? Who are you talking
What were you
to?
saying?
To whom? Me or Stafford?
You missed it.
Oh, the joke. Okay. That's. Oh, that was terrible, Mike.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded August 18th, 2017. It's the Money Path Podcast with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On episode 85, The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a conversation of news and the markets.
You know something very ironic? Snapchat actually came up with a feature I finally find interesting.
Crowd surf?
Yeah, the crowd surf, in which, you know, people you go to a live concert and everybody's like taking different little snippets of the live. So their AI now sort of stitches this all together and can produce, you know, it stitches all the different angles together over the same song. And so you sort of get this crowd surf live concert video, which is sort of cool. That's why until everybody else copies it. So I give it about another 3 or 4 weeks.
I wonder if that's an easy thing to copy technologically.
Well, they're not the only people with AI, so.
I think all through this podcast, you're just going to hear me go, Stafford, and then you're going to hear the mic turn on. What? Huh?
I'd be more worried about copyright issues. With other people's music or concert and stuff, you just can't go taping and mixing that and producing that.
Sure, if it's a Grateful Dead concert.
Who?
Huh?
I don't know. Is that going to become something where they don't fight it anymore? Just like
I think they're not going to fight it. I don't. Yeah. I think they're going to want that out there
because that's what musicians make their money off now, right? Is performing.
Yep.
I mean, they half them give their songs away for free. And then they just want you to come to the shows, and especially up-and-coming bands, right? Up-and-coming bands are always like, yeah, just here, download it here for free, pay us if you want, but don't worry about it. There's a band I really like called Lights Over Bridgeport. They're a young band. They're younger guys, like, you know, late 20s, early 30s, but they play the kind of music I used to listen to in college, with like kind of a rock-punk mix. And I think they're really good, and I go see them anytime they're around, but it's always at a bar that seats like 20 people. But their songs are free with a voluntary donation, which I always do because I like them. And then they're just like, they're on you when they have a show. Come to our show. Tickets are $9. Buy a shirt, buy a sweatshirt. It's like the only way they survive.
And well, I bring up Snapchat also because I think it put in a temporary low.
Really?
Yes.
Is there like a bell sound effect, something, anything to mark that Snapchat's no longer going to zero?
I didn't say it was.
I know.
But no, I think it put in a temporary low. I think it'll pull back, but it's put in a little base here. And I'm really interested to see what happens if it does rally to the $14 mark. There's a really significant area right there if it can get above there. So that's what I'm watching for. But this 1128 from earlier this week it looks like it was somewhat of a capitulation low. Mm. So that's why I'm also bringing it up, because interesting that we're finally getting some legs in Snapchat. It took it trading down to 1128. Now we're up to, what are we up to? It's 1361.
Yeah,
that's a huge rally.
That is a huge rally.
And hold on, I got to check in on my other favorite IPO. Oh, Blue Apron headed back down. It put in a temporary low at 5, rallied up to what was the high from earlier this week? It rallied up to 582, now back to 516. Still, that's one I'm not saying it's done. Went down. And another one in the IPOs I will not invest in corner.
Yeah.
If it actually comes out, Angry Birds IPO.
Come on.
No, they're planning a $2 billion IPO. So that could drop within the next month. So I'll be interested to see if that comes out. Especially if we continue this tech sell off and the IPO wreck. It'll actually see if they do it, but they're planning on a $2 billion IPO. Another reason I won't invest in that one also, because the last couple big ones that have IPO'd from game makers, which was, what were they? King Digital Entertainment, who did Candy Crush. They were actually acquired for a 20% discount to its IPO price in 2015 when the revenue started climbing. And Netmarble Games, the maker of Lineage and Stone Age mobile apps, declined 17% since its shares started trading in May. Wow. So I would not rush into any of these, even though you have the Angry Birds franchise, people tend to overbid these IPOs because, again, they know it, and then the revenues decline, or they don't have a smash hit or as big a smash hit as the last one, and then they either get acquired or lose money.
These like yesterday's sell-off, obviously we're recording this on Friday morning like we always do. Yesterday's sell-off was more about the potential for Gary Cohn to leave the White House because he is seen as sort of the tip of the spear on tax reform. So that's what that was. It wasn't even as much about the CEO councils, panels, whatever you want to call them, breaking up. It wasn't even really about that, because that was all for show from the CEO. So, and that's fine. That's politics. It is what it is. But everybody should know that that's what that was about. It wasn't about the terrorist attack in Barcelona, and there won't be anything from Finland either, because it's just not an economic effect. There just isn't. If it is, it's minuscule and temporary. It's almost like weather. They use weather as an excuse for everything now when numbers miss, whether it's economic data or whether it's a retail sales number that misses or an actual retail physical bricks and mortar store that misses. They go, oh, weather really affected us. The only thing weather affects is natural gas prices. So it just on a long-term basis, that's all. So we should just get that out of the way, and then we could keep going with the show notes, is that these attacks will not affect the markets. So people think that they're going to, it has to be super large scale and it has to be economic in nature. It's more likely that some sort of hacking attack would affect the markets, not this kind of stuff. We can go back to our regular scheduled program, unless you disagree, Mikey.
No, I don't disagree. It's the other things that are affecting. These are, people don't react much anymore to them either.
I don't. The last big reaction I remember is 2004 in Madrid, the train bombs. That's the last big reaction I remember.
So,
all right.
Well, I guess I should have put this back to back with Netflix, because this ties in Apple. There's stories this week on Apple readies $1 billion war chest for Hollywood programming. So it's Apple setting aside $1 billion to procure and produce original content over the next year. So they're now jumping in, the original content thing. They want to offer like high quality things. They were saying like Game of Thrones and other kind of stuff, but have it produced from Apple. So you have Facebook doing it now, even Snapchat's doing it. Everybody, it's all original content.
Yeah. Apple is a great tool maker, but Apple is a terrible carpenter.
That's interesting.
So do you think love that. Actually
did you make that up, Stafford? That's fantastic.
Yes. Because I want to understand why Apple has fallen from grace and has ruined itself. Apple is the new Star Wars.
I may actually use that on TV, just so you know.
So, you're saying Apple should produce a sci-fi
No, it's
original
broken.
content show.
It's broken.
No, you said Apple should produce sci-fi that you'll watch every second because you're all about spaceships and robots.
I like the Apple Etna thing. Do you have that in the notes, Mike?
No.
So there was a rumor.
Providing the watches, I read about that.
Yeah, there's a rumor about that. I don't know that it's done yet, but that's the kind of thing where I said on TV a while back that I think Apple will get wearables right, and that's kind of the type of step where they move into somewhat of a healthcare company, just like Amazon's trying to do.
So yeah, we'll see. I mean, we've talked about Apple wearables, and they're pretty much the only game in town when it comes to a wearable that actually people have to have.
Yeah.
Especially if they come up with all those other things like that glucose monitoring and everything else they're working on.
Yeah.
Can we get back to some things that make sense? Speaking of Amazon, Target buys the same-day delivery company to battle Amazon. Target is taking the next step. They're agreeing to purchase Grand Junction, a startup that manages local and same-day deliveries. So they're looking to expand into the same-day delivery market to battle Amazon, just like Walmart. And so you have sort of the Target corner, the Walmart corner, and then Amazon.
You know, why do they do? Okay, so here's my take on this. In order to battle Amazon, you have to have the same strategy as McGregor versus Mayweather. You have to be able to take a big punch within the first 4 rounds. That's, to me, the only way McGregor beats Mayweather. It's the only way anyone beats Amazon in anything. This is like Target is trying to outbox Amazon. You're not going to do that. I'm sorry. Target is losing on 2 fronts. They're losing on the higher end stuff that they were so good at 10 years ago when people were calling it Target, because people, as a joke, obviously, because people were like furnishing their house with things from Target, and they were starting to buy clothes at Target, and Target would sell out of these designer Target only brand items that these big designers like Missoni and them would make for Target. And then Amazon came along and just started taking all that away. So what did they do? They made we're a clean podcast, half-butt effort to battle that on price. And then they started losing things like toothpaste and toilet paper, which is a favorite subject of mine, and paper towel to Walmart. So now they're getting assaulted on 2 fronts, Walmart on the lower end stuff and Amazon on the higher end stuff. And they are getting smoked. They hate Target right now.
Well, at least they came up with better earnings.
Yeah, they did.
They beat on the top and bottom lines. Earnings per share came in at $123 versus expectations of $119. Revenue $16.43 billion versus $16.32 billion expected. And their comparable sales were expected at 0.7%, and they came in at 1.3%.
Yeah, and when were earnings? Because they didn't rally. When was the earnings date? It was this week, right?
It was this week.
Yeah.
It was what day? The 16th.
Yeah, I mean, and they did rally. I mean, they opened at 57 on that day, but they closed at 56.31. So they actually fell all the way to $54 from 57. So they fell like $2.53 and then rallied back up, and they sit there now at 56.25. Their low of this week's 54.25, so they're only up $2, which it's 0.5%.
Well, they rallied off their lows of 48.56 a few weeks ago, which I think they put in a bottom for now.
Along with Snap.
Yep. There's a nice chart pattern. Now I'm watching for the next, see if they can get a close really above 57, another close above 57.60. Then we could have a nice rally to about 61. Mm-hmm. I sort of like the stock where it is.
Yeah, I don't like it. I don't like the company. I'm not going to argue price action because I would trade the stock long if that's what you're saying. But I don't like the company anymore. I think Target's going to be the next JCPenney. It's just going to take time to do it because they have such a long, deep, loyal following. God, that sounded dirty.
We'll see. I'm actually not as bearish on. I was bearish on the stock for a long time. Now I actually like the stock. We're gonna have to see what they're doing with their store turnarounds.
Yeah, they need to do more.
They're just doing something. They started doing something better. We'll have to see if it sustains.
Was that GAAP earnings or was that earnings?
I think that was just regular earnings. I'd have
to. Good.
So I'd have to look that up, but I thought it was regular. Walmart also earnings this week came in at $1.08 versus expectations of $1.07. Revenue $123.36 billion, expected $122.84. That one they've traded down. It was interesting. They traded down straight to this week's rotation zone, hit it, and then rallied back up pretty strong. So they gapped down when they released the earnings, but now they look like they might even fill the gap today. So coming back to this 80-47 area. So that's one that's Walmart on these pullbacks, pulled back to its 50-day and on the daily exponential moving average, and the top of the rotation zone, which is the 8 EMA exponential on the weekly, and was a pretty decent area to pick up some shares if you wanted to continue to invest in Walmart. Any comments on Walmart?
I love Walmart. I think they're the only one who can possibly take share away from Amazon long term. And, again, I've said this before in shows, and I'll continue to say it. When you want to buy something on Amazon, just before you hit buy, check Walmart.com. I'd say 3 out of 4 times it's cheaper at Walmart. That's not going to happen. I mean, people are comfortable with their Prime memberships, and they just, but if you don't need it tomorrow, Walmart's usually cheaper.
And finally, not finally, but Home Depot beat. Coming in at 225 versus expectations of 221. Revenue $28.11 billion, expectations of $27.66 billion. Comparable sales 6.3% versus expectations of 4.9%, and the stock got hammered. Which I was a little confused on. I didn't hear anything really bad. Did you hear anything about that? Because the stock's actually sold off. It's pretty interesting. Sold off for 156. Now it's at 148.
I didn't hear anything.
So it's like they beat and they didn't beat it. I thought their numbers looked pretty good, but there's like this retail apocalypse going on where we just got to sell all the retail stocks that aren't. Yep. Dick's. This was interesting. Dick's Sporting Goods, whose stock I am not saying's done. Dick's is one that I would not touch yet.
Can we just use their stock symbol instead?
DKS.
Thank you.
I don't know why you'd have a store named that in the first place.
I know. I mean, it's not their fault. How old are they?
I don't know, but they came out. Let's see. Now they guided lower. Where are their numbers? What were they? Here they are. Earnings 101. They were estimated 101. They came in at 0.96 cents actual. So they missed, and they guided lower. They adjusted their earnings per share down to $2.80 to $3 from $3.65 to $3.75. So they've really guided lower. What was interesting, the CEO, Ed Stack, said, quote, "We have conducted extensive consumer research, and the customers have told us they feel our prices are not competitive in today's environment. The company is intentionally joining this battle, and we will aggressively be promoting our business to drive market share to our stores and online." So they're just going to do heavier and heavier promotions. They're fighting the Amazon battle. And they're just like, we just got to keep discounting until people come back in, and it's.
And there it is.
Yep.
Price cutting's a self-inflicted wound, but it's all you can do now because of Amazon.
Yep, and it's like, hey, we're guiding lower. All we can do is keep cutting. People won't shop with us unless we cut prices down to Amazon levels or less.
Yeah, I mean, what are you going to do? You're going to say, hey, we have this. You can't beat them in service. You just can't, and they sell everything. It's crazy.
So that's why I sort of highlighted Dick's earnings, because they're like, hey, CEO finally said it. This is the environment we're in. The only way to compete with Amazon is to match or beat their prices.
The other thing that these companies can do, and I don't know how you do it, one of the things I've always been kind of negative on is when analysts, especially on TV, guys like Jim Cramer and these guys on Fast Money, when they talk about how good a CEO is or how bad a CEO is, I always think, you guys have been traders your whole life. How do you know who's a good or a bad CEO? You can only judge on the stock price. But so I don't want to opine on how you do this. But the only other way to beat them is to somehow get exclusive merchandise. Look, I remember the last time I entered a Dick's Sporting Goods, I was looking for a specific Cubs World Series hat. And they didn't have it on Amazon yet. And they had a line outside of Dick's Sporting Goods. That was event specific, obviously. But I was looking for something specific that I figured if Amazon didn't have it, Dick's Sporting Goods might. I think that's the only other way to compete with Amazon is exclusive content. Again, I mean, we're talking about content, right? It's merchandise, but it's content. You have to have content that they don't have. That's it.
Very good. Speaking of content, in the WTF corner this week, have you heard of the company MoviePass, Bob?
Yes.
Did you see what they're rolling out now?
No.
So $10 a month. This is Netflix's co-founder's crazy plan. He's in MoviePass. He wants to subsidize your film habit, letting you go to the theater once a day, every day of the month for $10.
Mm-hmm.
You pay $10, $9.95, excepting it's slightly higher in New York and California, but you can literally attend. As participating movie theaters, you can go to one showing a day, and you've paid $9.95 all month. Now they say they're doing this because they essentially have to pay the movie theaters also because somebody's attending a movie every day, and you have to use your app, which is tied into a Visa thing. But they're going to be reimbursing the movie theaters the cost of this. They're doing it to gather viewing and to collect data on viewing behaviors. The information could then be used to eventually target advertisements or other marketing materials to subscribers. Oh, I want to know,
how do they do this?
How much money is this going to cost?
How do they do this? I mean, they're paying the full price to theaters.
They're paying, I don't know if it's the full price, but they're not going to.
That's what it says. MoviePass will pay theaters the full price of each ticket used by subscribers, excluding 3D and IMAX, which I don't really go to anyway, personally. So
let's say you don't even go. Let's say you just go every weekend. You go Saturday and Sunday. Let's just go with that. Mm-hmm. So there's four. That's you're seeing at least 8 a month. So that would be like you paid $10 and you just want to see $80 worth of movies. And if you go Friday nights, now you're up to 12 movies. So,
it's the gym membership model, though, right? It's like gym members or gyms hope that they get enough to buy the ticket that don't go. They forget. $9.99 comes off their credit card. There's nothing they want to see, so nothing sparks their memory to say, "Oh, I got to go to at least one movie to pay for this thing." And I can tell you, in terms of theaters, I don't know about you, Mike, Stafford, in terms of theaters, I go once every 3 or 4 months. But I'd still consider doing this, in my mind, thinking, this will now make me go. And then it will probably make me go for the first couple of months. But they need enough people like me that it'll come off their credit card and they won't even notice. You know who's a good example of this?
It's the cost of one movie.
You know who's a good example of this? It's less than the cost of a movie.
Well, in downtown Chicago, yeah.
No, even here. I mean, even like the suburbs of Chicago, it's not $10 for a movie for an adult.
It's not.
No, it's like 12 or 15.
So if you go, you're ahead of the game. Well, hey, let's see. So if you pay for 3 months and you only go to 2 movies in 3 months, you've still broken even.
Does MoviePass get a cut of concessions when they sell a ticket? I
have no idea. AMC's also said that they've been a partner of MoviePass, and they're like, we want out now, because which I don't know why they would, because they're still getting, MoviePass has to pay them for the movies. So I just typed in streaming thing where you pay your thing, like in streaming you pay your, whether Netflix or HBO or whatever you're streaming, or Showtime, and you pay that you can watch as much content as you want for your monthly fee. They're doing it, but you actually have to go to a theater now.
Yeah, I just typed in movie tickets.
I think that's going to zero. It's why it's the WTF tying into going to zero.
I just typed movie tickets into Google, and I looked across the movies that popped up, about 8 of them. There's not one I would go out of my way to see. Not one. Right now. Now, does that mean that if I join this, I wouldn't go, I'll go see Logan Lucky or The Hitman's Bodyguard just because I already paid for it? So let's see how much a suburban movie ticket is right now. And this is movietickets.com, who I guess would be a competitor, right? In theory. Let's see. Here's one in Schaumburg. I'm just going to pick a random movie, a 7:30 showing. Or should I go to the cheaper one, like 1:30 or 4:30?
No, let's just go with our when. All right.
Right now, they're $11.87 for an adult ticket at a 1:30 p.m. showing. $11.87. $10.25 for a kid. $10.25 for.
And what is it for the nighttime?
Let's see. This is Logan Lucky. I don't even know what that is.
I'd probably go see Atomic Blonde.
Yeah, I mean, at the risk
I'd go see Dunkirk.
At the risk of being called all kinds of non-feminist names, nothing bothers me more than when I see somebody with the physique of, what's her name, Charlize Theron, throw a right cross and knock a 6-foot guy out. I mean,
all right. So I'm looking for the tonight showing of Atomic Blonde, okay? Mm-hmm. At the theater near me is, per adult, is $13.63.
Here's the Lincolnshire Stadium, $11.79 for a 10 o'clock show. So it's over $10, I think was safe to say, right?
Yes, we're over $10. Although you probably fit in the senior category, so your cost...
They don't let me do that. It's BS, because I can get an ARP card, but I don't get to use it in a movie theater until I'm 60 or something. I don't remember what it is. Yeah, the ARP card doesn't apply. It has to be an age thing. It's annoying.
I didn't know that.
It's annoying.
Do you have anything before we get to the electric and self-driving car corner, which is chugging along nicely? Do you have any crude update for us for those cars that still burn fossil fuels?
Crude continues to OPEC continues to overproduce. This will be a really short crude update. OPEC continues to overproduce. We got a little bit of a spike when we got another draw in the EIA figures. We got a little bit of a spike in crude oil. Right now, as we're recording this, crude oil is down 0.25%. We dropped below $47, popped back above it. We're above $47 right now. I would guess that we would probably stay above $47. We'll stay above $46.50 today because there's no news. But rig counts were up 3. They were down 8 total, but they were up 3 oil rigs. They just happened to be down 11 natural gas rigs. So everybody's got to remember the rig count number, the headline number is natural gas and crude oil. So if you're looking at crude oil, they continue to overproduce. OPEC did nothing in their Abu Dhabi meeting to say that they were going to do anything more about prices. I think they're close to throwing in the towel. We're still in that downward channel, that longer term downward channel. If you go out to a weekly chart, you see we just kind of made another lower high with that move that we made The first week of August. That move where we got just, I think it was 50.43 was the high for the September contract. So we're still in that slight downward channel. And I think going into wintertime without some sort of respite in terms of production, which nobody seems to be doing, that's it. The up move is pretty much over. That's all I got.
Did you say respite?
I said respite.
Wow.
Somebody please find out if that's a word before we end the podcast.
It's a word.
It's a word, huh?
Yes. Word. Well, for all those people who don't need to burn those evil fossil fuels. Interesting. July 2017 sales numbers for U.S. market for electric cars. On top, Chevrolet Bolt.
Wow.
1,971 units sold. Second place, Tesla Model X, 1,650 sold. Next, Chevrolet Volt, 1,518. Finally, Tesla Model S, 1,425. So Chevrolet technically sold more electric and hybrid electric cars than Tesla.
What is the best-selling car in the U.S. by month?
Camry.
Regardless of fuel. Is it a Camry still?
I don't know, but that's my guess. Camry to block.
It is not.
Is it a Honda?
It can't be Honda.
Laugh?
Can't be Honda.
It is a Ford. It is a Ford F-Series truck. 820,000 units last month.
No, give us a car.
Sorry, car.
I want a car.
You want a car?
Yes.
Trucks and cars are actually broken out by the industry.
What does Stafford win? It's a Toyota Camry, 388,616.
So you're saying that people buy still...
And that's down 9.5% from the previous year.
So are people buying these evil cars?
I mean, the rate at which electric cars have to bump up to make any sort of impact to markets or to climate is insane. When you're looking at the other ones selling hundreds of thousands of cars.
That's why I find the whole Tesla's thing still laughable.
Yeah, I mean, you're talking about a total of about 6,000 electric cars in your list. There are other electric cars, obviously. These are just the top 4.
Right. I just thought it was interesting, that, hey, the Chevrolet, is making an interesting play in this marketplace.
Yeah, they really are.
And GM also announced that they're now testing a fleet of 46 robo-car taxis in San Francisco. And I believe those are using modified Bolts too. But here's the timelines for self-driving cars by each manufacturer. There was a timeline published, somebody compiled it. Ford, truly self-driving vehicles by 2021. GM, unspecified, but there's rumors of self-driving vehicles by 2018. Honda said self-driving on the highway by 2020. Toyota self-driving on the highway by 2020. Renault, Nissan 2020 for autonomous cars in urban conditions, 2025 for truly driverless cars. Volvo self-driving on the highway 2021. Hyundai highway 2020, urban driving by 2030. Daimler nearly fully autonomous by early 2020s. Fiat Chrysler expects there to be some self-driving vehicles on the road by 2021. BMW, fully self-driving vehicles possible by 2021. Tesla, end of 2017.
I love it.
Well, didn't Tesla also guarantee that back starting in 2016 or something that any car you bought already has all the hardware included for fully autonomous self-driving cars?
Yeah.
Oh, and they'll guarantee it.
I love it. That's the thing. I'm so as I get older, and so I'm going to throw in a serious note here that part of watching the torture of watching my dad go through what he went through before he passed away was him losing his car was the first step. Autonomous takes care of that, man. I love it. Absolutely love it.
So I think Tesla's a little, I think they'll miss on that fully self-driving.
Yeah, I think you're right.
Also, what's interesting, here's what's fascinating to me, because there's, at some point, there's going to be legislation that is going to say if you're going to have a truly self-driving car, it's got to have this level of redundancy. It's going to get passed.
Yeah.
And that's what sort of worries me about the Tesla thing. We guarantee from a hardware perspective, well, all it takes is they to say, hey, you need to have this much redundancy. And Tesla goes, oops, we now have to go back and retrofit every car and we've promised it in our sales conditions that we've already guaranteed you have it. What if they had to recall every Model S and X to upgrade the hardware? That would be a problem for them.
Yeah.
They also, we talked about this last week, but their new debt offering that they were doing 1.5 came out at 1.8 billion. Already traded, it was issued at par, already trading below par now this week. This was the maturity of this debt coming in at 2025. Valerie Potenza, the head of the high yield research at Extract Research LLC, said, quote, "It's a very lousy set of covenants that the debt offering did. Where was it? Hold on. Buyers of these unsecured high-yield bonds could find themselves buried under a mountain of newer, higher priority debt sold in the future, since they could essentially, the way the bonds were issued, they can come out with future bonds that essentially are more senior to this. So this is really unsecured debt, and it's a big gamble. And now it adds $95 million. What is it? Per month or per year? I'm trying to remember to their burn rate of cash. So they're just adding, and a lot of people still are wondering why they didn't go to equity raise, but it's going to be interesting to see what's your bet, over under, when they have to have another cash raise?
I would say late first quarter it gets announced.
So you're giving them 6 months?
I'm giving them 6 months.
6 months. Okay,
they raised enough for a quarter and a quarter of cash burn. So unless they all of a sudden spike in sales, which, wow, that Tesla Model S 1400, I know they're expecting the X was it the X? What's the other one? The 3. To make up quite a bit of that, but it's not going to.
Yeah, but don't forget, any month now we're going to get the unveil of the 18-wheeler electric semi-truck, and
there's that.
And then there's isn't there a bicycle or motorcycle or
pickup truck?
Oh, pickup truck, yeah, pickup truck. He's already thinking of the future's future.
Well, it is a simulation, so he doesn't have to worry about anything.
It is a simulation, and Fiat Chrysler Automobiles, Fiat Chrysler joining BMW, Intel, and Mobileye. We talked about Intel and Mobileye last week. So now they've partnered with BMW and Fiat Chrysler to co-develop the autonomous driving platform. The platform will be scalable for level 3 to level 4 to 5 automated driving, and will be used by multiple automakers around the world. So that's our little self-driving corner, which keeps picking up steam. And it's
huge fan of that.
I get to talk about Tesla.
Huge fan of that.
But all these other big partnerships are happening in this. It's fascinating how fast it's moving now.
Yeah.
And you saw when we went through that list, which I thought, literally a lot of these companies, 2021 for high level 3 or possibly low level 4 self-driving cars.
Love it.
That's not far off. You'll still be at a ripe young age by then, Bob.
Good enough to pick the color self-driving car I want for when I'm drooling all over myself. Hey, I can joke about it because my dad went through it, so that's it.
So we have cryptocurrency section.
Mm-hmm.
We have the Ethereum investors eagerly awaiting more news about the Enterprise Ethereum Alliance. The Enterprise enterprise platform that's supposed to transform Ethereum into the Amazon Web Services of the future. So the speculation that there will be enabling the Ethereum network to process 1 million transactions a second and could boost the value of the Ether tokens past $2,000 a coin. They're currently trading at about 300. That's very interesting for Ethereum. This is also Microsoft, who's a key partner in the alliance, has released the COCO framework, the Confidential Consortium framework, which is an Ethereum-based protocol that could revolutionize how companies use the Ethereum protocol for business applications. This framework improves scalability, or the network's ability to process a high volume of transactions. It accomplishes this by creating what's called, quote, off-chain structure for running distributed applications. The off-chain structure, also known as side chains, are crucial to allowing the Ethereum network to someday process millions of transactions a second. So this is another ways that enterprises are looking to apply the blockchain technology to meet their business needs. Very interesting in the Ethereum alliance. In stuff relating to us, IRS cashes in on Bitcoin boom.
Really?
IRS is now actively seeking those who made money in Bitcoin and did not report the gains to the IRS.
I am not allowed to comment on this part.
They use a, quote, John Doe summons to collect all records from the Bitcoin trading website Coinbase. So they're just going after, like, if you have a Coinbase account, and hey, we just want to do a blind grab. So a lot of people are saying, how does this is not jiving with the Fourth Amendment, but the IRS is now wanting their share. If you've made Bitcoin profits, keep an eye on that, and you didn't report it. Bitcoin did go to new highs before pulling back this week. Then they surpassed the market cap of PayPal. Mm-hmm. So Bitcoin total market cap passed 70 billion for the first time.
So here's the thing: I don't understand people comparing it to things like that. Just to jump in, when you compare Bitcoin's market cap to PayPal, well, what's the U.S. dollar's market cap? What's the yen's market cap?
They were
What's
treating it
gold's
because,
market cap?
of the Bitcoin payment services to say, okay, because a lot of people, the current largest digital payment network is PayPal.
Right, but is Bitcoin? Do we believe cryptocurrencies? And this is, I'd actually like to go into the subject a little bit. Do we believe cryptocurrencies are a payment service, or do we believe they're a currency? I believe they're a currency. So to compare them to the market cap of a security, to me, I know you're not doing it, Mike. I talked to somebody about this during the week. Actually, it was the guys at Trendy Trade. They're like, should Bitcoin's market cap be here? I'm like, well, where should the yen's market cap be? The Federal Reserve decides what the yen's market cap is. I'm sorry, Bank of Japan. To me, it's a stupid comparison. But go ahead. It's not you making the comparisons, it's you reporting how big it is.
I think Bitcoin was originally developed as a payment mechanism.
Correct. So, but we don't trade. We trade PayPal as a company. People don't trade Bitcoin as a company.
No, people trade Bitcoin as a speculative. I don't even think
as an asset class, and I believe it's an asset class. I believe cryptocurrencies are an asset class.
All right, and I would not lump them in with a currency, though.
I would.
I wouldn't.
We can discuss that. I'd actually like to
have an 89% increase unless you're a hyperinflationary currency.
Unless you're controlled by a central bank who decides to do that to your currency. I understand that they don't trade like a currency right now, but they certainly don't trade like a stock either.
I'd put them more in a momentum stock category than I would.
300 and some odd percent in a year, in less than a year.
Huh?
300 and some odd percent less than a year.
Yeah, there's stocks in that. There's stocks that have done it.
There's no board. There's no CEO. There's no product. There's nobody that can adjust the direction.
They trade more like momentum stocks than they do.
It's fine to me. It's fine to say they trade like that, but as an asset class, they're much more like a currency than a stock to me, because there's just They're more like gold, to be honest, even though I don't like that comparison because there's no physical thing. Gold has a physical use. Cryptocurrencies, to me, trade off of scarcity and off of the desire to not be tied to a government.
I think some do. I think you're lumping all cryptocurrencies into those categories.
Well, I didn't finish, but a little bit, yeah. I mean, they're also a technology. They're also a technology play,
right? And
but you can't take a share of PayPal and buy a pair of shoes.
No,
you can do that with Bitcoin.
Technically,
no, actually.
Well, it depends again if you're in Bitcoin Cash, or if the merchant accepts it, because not all merchants accept it.
Right, but you can take Bitcoin and buy a pair of shoes.
Right, I can take my PayPal account and swipe it at Home Depot and pay for stuff.
But you're not paying with a PayPal stock. You're paying with cash in your PayPal account. That's paying with dollars. That's not paying with PayPal. You're using PayPal.
Then there's cryptocurrencies that will never be used for payments.
Yeah, there is, but we're talking about Bitcoin.
Yeah, well, I'm sort of using it as Bitcoin's actually, it's the largest one, but it's actually not the most interesting one.
Maybe not.
So
that's
I actually think Bitcoin's one of the only ones. There's a couple that you can make the argument for that you're making. I don't think you can make it on most cryptos.
Maybe not, but I'm talking about Bitcoin. Like the comparison was made of Bitcoin.
Because like we talked about, Ethereum and all the Ethereum alliance is not even about payments. It's got nothing to do with payments. So IOTA coin is not much to do about payments. You have some that do. XMR, Monero does, but I'd lump that into more of the Bitcoin thing, and the other ones I'd lump in other things. They have nothing to do with payments.
I'd be more worried about the globalist bankers really deciding to take cryptocurrencies out. I'd be worried about that. That's where my focus would be.
Well, see, Australia follows Japan and moved to regulate Bitcoin. So
pluses and minuses to that, right? Because Australia's talking about passing a law that makes it an acceptable form of currency, which is backdoor regulation of it, right?
Which also then they're doing this for the anti-money laundering laws, and they're looking to regulate the digital currencies. So if you're doing transactions in it, they're looking to regulate it based on the guise of anti-money laundering.
Yeah.
So once you start down that path, that every transaction now is theoretically regulated, or it has to have oversight by the government, then that's where it gets interesting. So yes, it legitimizes it, but it also then regulates it, and then they can pass more and more laws, or they could say, hey, any Bitcoin transaction over $5,000 has to be reported.
Right. One of the beauties of this is that it goes back to what currency is, right? Not fiat. It's the only non-fiat currency other than gold. And I'm talking specifically about Bitcoin because I'm not versed enough to know what Ethereum's about. The things I know, currency trading, I know forex. So I'm going to focus my early stage interest in cryptos on the ones that you can pay for something with, because that's that's kind of my realm of understanding. So when I look at those and I think, God, this is great. This is exactly what currency used to be. Gold has not always been currency. You used to be able to pay for a goat with a gold necklace. It wasn't like there was a coin. Someone actually had to mint coins, which I believe was the Persians that did it first, but I'm not sure. Where they actually minted coins that were in the same size and scale. Prior to that, it was jewelry. Hey, I've got this gold bracelet. Can I have your goat? And people like gold, and it was scarcity, and it was beauty of it, and it had a physical use. And Bitcoin is scarcity, and you're actually going to have, and I'm surprised Amazon doesn't do it yet. And I'm surprised Amazon hasn't said, we'll take Bitcoin. Bitcoin would double in price if they did. I go from 4,000 to 8,000. If Amazon said, we accept Bitcoin now, regardless whether the government believes in it or not.
No, it's a tax. It's the taxes that it's not for real yet. Nobody knows. You can trade it, but
it's the only thing that gives fiat currency value is a government accepting that currency for the payment of a tax debt. That's it. Otherwise, it has no value. That's what gives it value.
Well, Bitcoin has gotten value without any of that, without having a physical use and without being acceptable currency to pay tax debt with. So what is its value derived off of?
What people are willing to trade it at.
Yeah. Exactly. So it's like if places start to accept, let's just stick with Bitcoin, because again, that other stuff's out of my realm of understanding. If retailers, if my brother at his restaurant said, yeah, I'll take Bitcoin, I'll take it, sure. I got my iPhone right here, I got my iPad right here, here's my wallet. When I see it pop in, you can take your food, right? Man, that screws them over. Bankers, government, everybody. And they simply can't stand for it. It's just so interesting. So glad I'm not on mute anymore.
In other Bitcoin news, Bitcoin might break off into a third cryptocurrency. We have Bitcoin, which has the 1 megabyte blocks and segregated witness. Then we have Bitcoin Cash break off, a couple weeks ago, which has 8 megabyte blocks and no segregated witness. Now we're talking about SegWit 2X and the New York agreement, which they want to break off into a third one, which would have 2 megabyte blocks and segregated witness. That's where it's going to get very interesting. If they keep breaking apart Bitcoin, and then what actually retains the value, because this is getting a little risky if they keep breaking Bitcoin, which could really top it out, and meaning that won't be the go-to. I mean, at some point you dilute it. You keep breaking it off. Then what's the real Bitcoin? Which is it? What are you doing? You're splitting it off, but it's not as bad as we talked about the ICO market. Filecoin ICO, which we tell people to be very careful of, they raised $250 million without a viable product.
Are you telling them to be careful of ICOs, Mike, or of Filecoin specifically?
No.
ICOs?
Some of these ICOs that people are just rushing into, they're just throwing. It's back to this reminds me of the late period of the .com days where people just, pets.com, let's just throw them all this money, and then
it's always the one that comes up, pets.com.
Huh?
I love it. That's always the one that comes up. Pets.com is the best example.
Remember, it was the sock puppet thing. But
it's the best example ever.
So Filecoin raised all this money. The company's idea is simple: allow users to receive payment in cryptocurrency for donating unused hard drive space to Filecoin's network. The Filecoin initiative is designed to allow users to exchange empty storage space in their computers for tokens. Users can then earn tokens for contributing space in their hard drives, or can use tokens to buy space from other users. So people threw money at them. They initially raised $250 million off this. Protocol Labs, which is the company behind Filecoin, hasn't built the Filecoin network. It's still in white paper stage. You're going to see a lot of money disappear from people are rushing to these ICOs, which again the SEC wants to regulate, and a lot of these companies are still ignoring that the SEC has already said they want to regulate it, and they're saying you got to. So companies are just coming out fast and furious, raising money on things still in white paper stage, and it's like, okay, you don't have anything even developed yet, and you don't even know if it's viable, and it's the Wild West of IPOs now. Just be careful out there. Research how much, because not every company, some who have there's been initial coin offerings actually have a viable product, or a product that's, in alpha or beta testing. But some of these companies, it's just an idea on a piece of paper, and it could all go poof.
Crazy.
So that's it. That's all I have for cryptocurrencies.
Great segment. Love cryptocurrencies.
Love cryptocurrencies.
I'm a cryptocurrency Jedi warrior now.
Okay, you got your big toe in the Bitcoin.
Water's warm.
Come
on in.
I still think the volatility of these things are going to be massive, though. You're going
sure. Absolutely.
I mean, I could see Bitcoin, something happening, and Bitcoin value being trimmed in half overnight.
Yeah.
Don't know what that would be yet, but it could happen.
This is just like anything else. For those of you listening, that cryptocurrencies, I mean, if you're playing around with more than 5-10% of your investable assets in cryptocurrencies, you're out of your mind. Yep. This is high risk, high reward stuff, and you don't do that with large portions of money.
No, this is stuff you carve out some of your risky tradable or investable assets, and you say, okay, I'm willing to lose this.
Yep.
Should something unexpected happen.
Yep.
Especially since it all only exists electronically, and should there be some major electronic disruption?
That's the other thing.
Like EMP
aliens?
or something.
Space aliens?
No, EMP.
Amazon, CIA.
EMP.
Cows.
At least you can dig up your gold in your backyard.
I know. That again is why when they asked me if you compare cryptocurrencies to gold, I'm like, just stop it. They're different.
They are different.
They're different.
They could both have their purpose in a similar way,
Absolutely.
But they are very different. One is a tangible asset. One's completely intangible.
Yeah, Tutankhamun was more interested in gold than Bitcoin. Tutankhamun. Tutankhamun? Is that who he was?
You're going to the Mayan Empire now?
No, that's Egyptian.
You're both so wrong, by the way. It's Egyptian and it's Tutankhamun.
Yeah, it's the later.
Steve Martin fame.
Yeah, King Tut.
So is Steve Martin more interested in gold or Bitcoin?
He'd be more interested in gold.
Cruel shoes.
He's old.
U.S. economy.
Comedy records.
Retail sales beat, coming in at 0.6% versus expectations of 0.3%. Industrial production, that missed, coming in at 0.2% versus expectations of 0.3%, and the last was 0.4%, so that's sort of going the wrong way. Manufacturing production missed also, minus 0.1%, expectations of 0.2%, the last was 0.2%. Goldman raised his third quarter GDP estimate to 2.8 from 2.7.
When was all this data?
Huh?
When was all this data?
This week.
Yeah.
It's this week. The GDP Now model for real GDP growth in the third quarter by the Atlanta Fed, they're saying is 3.8%. In interesting other Fed news before we get to Fed meeting minutes, New York Fed President William Dudley on Tuesday encouraged homeowners to find prudent ways to tap in the equity line that is built up in homes, saying that the boost in consumption would be a welcome shot in the arm to the economy.
Oh my, here we go.
Yep. No, we went down this path before with tapping home equity. Now, quote, whatever the timing, a return to a reasonable pattern of home equity extraction would be a positive development for retailers and would provide a boost to the economic growth, Dudley said. So now go get your home equity line and go spend the money on stuff you don't need. Is that their new hope for the economy?
Ugh.
Could you say that again? I really want that. I really want a little more emphasis, because I read that and I sort of had one of those burp vomit moments. I'm like, this is not going to end well again. Please, it hasn't even been 10 years. Can we not go down the same path?
Right.
Oh. Anything you found interesting from the Fed meeting minutes?
To me, the Fed meeting minutes were bearish. And they're recognizing, in my opinion, that the Phillips curve, which is employment causes wage cost rises, which cause price rising, right? That it may not be taking hold the way that it used to. And that's and I'm paraphrasing the whole thing. When they talk about inflation reflecting in idiosyncratic factors, this is 6 months in a row of falling year-over-year CPI. I mean, is half of a year idiosyncratic? I think that the conversation is starting to get more and more serious about maybe this is not transitory, right? And they don't say that. They know that the meeting minutes are going out to the public, right? it's my opinion after reading these minutes that they're going to do this stuff anyway. And they're just going to continue to kind of manipulate their verbiage around the data. Even the data that Mike just went through, that you just went through, employment is the only data that looks strong and trending higher. Virtually nothing else does, and I'm including work week and wages in that. Everything else seems to be sideways to lower. The rest of the data is not cooperating. And I think it has a lot to do with what we discussed earlier in the show, where we were saying the only thing you can compete on is price now. Mike mentioned Home Depot competing on price now, right? Or Dick's competing on price now, right? Where it's like that's all they can compete on now. And that is, in its, by its very definition, deflationary, not inflationary. And that's not going to have wages rising. But even more than that, nobody buys anything without looking for a discount first. They just don't. So I don't see these things as idiosyncratic. Even the UK, which had the strongest inflation of the developing nations, the only one that was even close to them prior to this, well, Australia was close, but everybody else is basically at 2% or lower, and the UK was at 2.6%. Their reading this week was flat, and the EU was 0.6. From close to 2%, they dropped to 0.6. It's just, the numbers aren't good. So I think the Fed is basically, in their minutes, if you read through them, they're basically saying, okay, we kind of need to figure out how to say we're going to do this anyway. That's what all that was to me.
Yeah, one of the direct quotes, many participants, however, saw some likelihood that inflation might remain below 2% for longer than they currently expected, and several indicated that the risks to the inflation outlook could be tilted to the downside.
Yep.
So
that's new, by the way. That quote is very new. They didn't have downside risks in their last few conversations.
Nope.
Crazy.
Others interested. We had Kaplan speaking. I think this was yesterday. He was saying that market valuation alone isn't enough for me to be alarmed, but he worries about a correction accompanied with leverage. And
you might be speaking to people you know, right there, Mike.
Oops. So yeah, that the leverage thing. Yeah, but the U.S. doesn't have much fiscal room due to high debt level, and it's very hard to see how the math works for fast GDP growth. That sums up his. Oh, that was cash and carry. That was cash and carry.
Did you see Kaplan's notes from, like, basically during the show? Some notes came out. I don't know if you got those. Again, this is Dallas Fed President Robert Kaplan. There is no doubt that as the yield curve gets flatter and inverted, that is a sign of economic trouble. I'm sensitive to that fact. And I think we need to be very patient and judicious in the next move on the Fed funds rate. That's what tells me some investors, that's what it tells me. That's the end of the quote. We have to be careful in our further moves. I expect the long bond rate to go up as we continue on the strategy of gradually removing accommodation. So listen to that. He says that we have to be careful on the next move of the Fed funds rate, but I expect the long bond rate to go up as we continue on the strategy of gradually removing accommodation. So something that we've talked about before, Mike and I have discussed, I believe in the podcast, we've discussed it offline for sure. This is the first time in the history of any recovery where the Fed actually has a direct effect on long duration rates. They've never had that before. They've only had an effect on short-term rates, and they've relied on the raising of short-term rates to throw long-term rates higher. And that hasn't been happening. Long-term rates, 10-year notes back in the 220, 230 range after having risen above 230 a few weeks back. This is the first time they have control over that. And they control that by reducing their balance sheet because most of that stuff is 5 years and longer in duration. So that's what they're doing. They're going to reduce the balance sheet. The Fed funds rate move may not happen right away. Who knows? But they're going to reduce their balance sheet. So that's what I mean by they're going to do this anyway. The only thing they've really announced a timeline on, they never announced timelines on adjustment of Fed funds rate, but they've talked about September. They've openly mentioned the month September about reducing the balance sheet. I think they're doing that either way.
Gotcha. Anything in international that you spotted this week?
International is all fake news. I'm
Really?
kidding. No. Draghi is not going to talk about the economy at Jackson Hole. He said that. He's speaking at Jackson Hole, but he's not going to talk about rates. It's funny because that's kind of what Jackson Hole's about.
What Jackson Hole is?
So the U.S. Federal Reserve holds an economic symposium every year at Jackson Hole, Wyoming?
Yep.
Oklahoma? Montana?
Wyoming.
One of those flyover states.
Wyoming. Oh, boy.
I live in a flyover state. It's fine. Again, I can make fun of Italians. I live in a flyover state.
Okay,
move on. So they hold this symposium every year, and they invite economic leaders, central bankers, business executives, and they all sort of discuss. It's a symposium. They play symphony music, I think. That's what that is.
Is that what you think goes on in a symposium? Or would that be a symposium? Oh, I'm sorry I had to go there. Hey, Japan's second quarter GDP came out at an annualized 4%, beating their estimated 2.5%. Big news in Japan.
Yeah.
They could hit the 4% GDP. That's pretty interesting. Oh, you talked about Draghi?
Yeah.
Schauble says from Germany, quote, "The Germans must be able to understand what you're doing," in reference to Draghi. What are you doing exactly now? What's your policy? Because we got to understand it.
Make sure you tell me what you are doing before you do it. That's only more like a Serbian. Go ahead.
And he also said that the ECB needs to be careful when ending its ultra-loose monetary policy. Quote, "I hope it goes well."
I'm wishing you well on this.
Yes. I'm thinking it might not go so well, but I am wishing you well. Oh, so that's all I had for major.
That's been so good for Germany. The weak euro has been just unbelievably good for Germany in their manufacturing sector. They hate that the dollar's falling against the euro.
Yep. That's all I had in that, unless you had something else that sparked your interest.
Nope.
Because what's your why on?
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Sterling and the Bank of England and Mark Carney. Very interesting, isn't it?
Well, let's hear it.
I need some encouragement. You're just not a nice person, Mike.
But that's not going to help me be nicer.
The Bank of England is the central bank who is in the worst situation, and they're in the kind of the worst sort of backs to the wall position of any of the central banks. Mario Draghi is probably in the best because the ECB has a limit. They can only own some 33% of their total holdings in public securities, publicly traded securities. So they're in kind of the best situation because they have to taper at some point, or the law needs to be changed, which can happen. It's a little bit more complicated than him just tapering, but they can adjust that level if they want to. The ECB doesn't do it. It takes the whole council. It's a whole thing. But this U.S. Fed, obviously, as we just discussed, it's our opinion that they're going to do the long end tapering anyway, and then be more cautious on short end rates, trying to get the yield curve to steepen, which will make more money for banks. Theoretically, they'll lend more with that sort of a situation. Theoretically, we'll see. But the UK's Bank of England is in a seriously poor situation, especially if their CPI starts to flatten and turn down. So they've basically imported inflation since Brexit. The pound has fallen precipitously. It's another big word I used today, Mike. Precipitously. The pound's fallen precipitously, and because of that, imported goods into the UK, which is a large majority of the goods that are sold in the UK, they don't have much of a manufacturing economy anymore. The prices have risen because their currency is weak. So they've imported inflation. And since the inflation hit that 2.9 number, basically analysts and some central bankers started talking about their inflation, the pound started to rise a little bit. But since then, it's fallen off because Mark Carney, the Canadian-born governor of the Bank of England, has kind of said that we have to be really cautious, and they have to be cautious because of Brexit, because they don't know how these negotiations are going to go or what the overall effect is. There's never been a Brexit. There's never been any sort of exit from the EU or any other monetary union like that. So nobody knows how this is going to go. So the Bank of England is in a really, really, really bad spot, a really bad spot. They have virtually no way out. They can't really hike as aggressively as their inflation needs them to. And because inflation fell a little bit, if inflation starts to fall because this currency is stabilizing, they then can't hike because they don't have the inflation as cover. And then that's going to in turn spike inflation again. So they're literally in a situation of like a dog chasing its tail. No matter what they do, they're kind of screwed. They're either going to have a super weak currency, which brings about some sort of, I don't want to call it hyperinflation, but inflation that's damaging to the economy, or they hike rates in the face of a Brexit and they don't know what result and they drop into a recession. Either way, it looks like you need to sell sterling US dollar in any sort of rally that gets into a good price zone. If you like our analysis, Mike can tell you when. But you just want to sell rallies in sterling US dollar whenever you can, because the Bank of England simply doesn't have a way out. That's my why.
Very good. You'll probably want to comment too on my what.
Shoot.
Speaking of no way out. Oh, well, we talked about, what was it, a couple weeks ago? Or yeah, it was the double bottom in Tesla that ran up and hit the stop reduction zone. We've now triggered a double top in Tesla, which this is quite fascinating. The double top that triggered yesterday, which almost ran down to its stop reduction zone, could go to full target of 337.24 without stopping out the other larger double that was triggered.
I love these.
So it's a double within a double.
I love these.
And that's why I said you might want to comment, because
I will. You want to comment now, or you want to wait till you
point out the key levels on this double, just so I point them out, are 345.43 stop reduction, and this is a short. It's a short. Right now we're trading 348. The first profit target is around 341.34. The next one is around 337.24. That's the full target, because the stop on this other double that was triggered is still below the 330.86. So there you go.
I love these because there's a such thing as trading around a core position that Mike and I have kind of, I want to say, taught on for a long time. And in this situation, the core position is long Tesla. And if you just hold that core position, which is not a horrible thing to do, if you just hold that core position and you ride the wave down, you incur losses on your long position, right? But if you sell out of it, while I don't want to get into the position sizing minutia of it, but if you sell out of it because you want to be short this particular double top, you don't necessarily pile on. So if you are long 50 shares of Tesla and now you want to short this interim double, you sell that 50 share out and you sit flat. Okay, you don't actually put on a short position. But if you were tracking it on a spreadsheet, you'd be long 50 shares and short 50 shares. And then when you get to the full target of the short, you buy 50 shares back as if you're covering the short. And now you're long 50 shares again at a better price, not having incurred the losses of the move down in your initial Tesla long. So I know that sounds complicated. And Mike and I are probably going to do a trading around your core position video at some point in the next couple of weeks. We might focus it on cryptocurrencies more so than stocks, but the same will apply. But these, I love when these things happen, because it gives you a way to sort of mitigate the volatility while still having a price action reason to do this. You're not just guessing. You're not just guessing at all. You have a price action reason to mitigate the volatility of a core position. That's all I want to say. I love these.
It became my what of the week because I thought you'd have something to say about it.
Love it.
So that's all I have.
Did you do Oracle already?
Oracle, we touched on that a couple weeks ago.
Okay.
Or last week. That's still in there. And, it triggered its double, rallied up to the rotation zone, gave even better entry prices. Now it's back down below the entry.
Awesome.
So, because we entered that one had to be entered on the rotation back up, but that was either trading it on a weekly basis or a daily basis, but it could take a while to unfold. And it is going against the rotation zone on the weekly, so it's a slightly lower probability one.
Cool.
Because those weekly rotation zones, you really have to watch when you're trading against it. Just like that, we never talked about it, like the Qualcomm double. That was against a weekly rotation that triggered. Did that trigger? Or what was the other one?
Qualcomm was the one.